All right, guys, welcome to another episode of Carnivore Trades. So today's just going to be a little special video. I'm going to reveal essentially why I've been so cautious and looking for really a major top this year. You guys know I've been talking about a potential for a major top, a possible bear market even, and I want to explain myself a little bit and maybe make a little bit of a prediction. So am I being bearish and, just because I'm grumpy and I hate the Fed and I want to I want to be the guy who calls the top and, I want to be that, perma bear. No, no, no. It has nothing to do with that. Um, you know, I've been in the campus markets in an uptrend and, it has been since 2009 and we know that. And, I'm not looking to turn bearish just because, I want to fight the Fed or anything or, just because I want to be a counter trend. Uh, I'm actually bearish because of major long-term cycles that are in play right now, and really just some historical analysis. So we're going to get into some of the long-term cycles here, and then at the end, we'll talk about a possible scenario that could play out into year end. So essentially, if you know your fib numbers, Fibonacci sequence, it's 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, etc. And essentially that's added up, that's calculated by adding the sum of the last two numbers to find the next one. And many of you may be aware of 21 being an important number. 13 is definitely an important number. 21 blackjack. There's lots of connections. You can make that lucky, unlucky 13. There's all sorts of things that coincide with that, and a lot of that has to do with Fibonacci. And why I think this market could possibly be topping out, or at least about to put in that process here, is there is multiple cases throughout history of bull markets lasting precisely 13 years, and also larger super cycles of bull markets lasting 21 years or 34 years, which are other fib numbers. So for instance, let's roll back the tape here, and we'll go all the way back to the 70s. So the market put in a major bottom in 74, right? So we had this kind of broadening pattern. So you see the higher low, or the lower lows and the higher highs there. And it finally bottomed out. We took out these pivots in 74. And then we topped out when? Everybody should know this. 1987. 13 years. And look at what the market did at the end of this cycle. It went basically parabolic after a little consolidation. It went parabolic and then went right back down. Okay, so there's one example. That doesn't mean anything, right? Okay, well, let's take the low of 1987, add 13. What does that give you? 1,000. So there's two examples of that playing out. Now we're going to flip over here to the Dow because the S&P doesn't go far enough back, but we're looking here at the panic of 1907. So at the end of 1907, plus 13 years, you get 1920. Now we put this pivot here in 1920, tested at double bottom, it held, and then we rallied up. We had the roaring 20s. Also, we have 1907 plus 21 would bring you up to 1928. Now it happened near the end of 1907, so the end of 1928, you had this little, you had the parabolic move, and you topped out not long after that, a few months later. And as you can see, it's not always exact. It's not always going to go to the exact day. Sometimes you'll have a little bit of an extra move at the end, like we had with this blow-off move, but it is in that wheelhouse. So there's evidence of that cycle working. There's also the 34-year cycle. So let's move on, and we'll roll the tape forward a little bit. And so here we've got the low in 1932. What's another fib number? 55. 32 plus 55 equals what? 87. 1987. Then we can pull the tape even further. Right, so now let's cut back to 1974. talked about 13. We have 1974 plus 34. Oh, that's 2008. Did anything significant happen there? So there's your cycles there. Now, let's just tie that into now. 1987. What's 1987 plus 34, everyone? That's right, 2021. But it doesn't end there. What's 2009 plus 13? 2022. So we're looking for some type of a major top to be put in this year. Again, I'm not just making this stuff up to be bearish. I'm not making this stuff up to be counter trend or to sell newsletters or something like that. I'm not some perma bear. And again, you guys always hear me talk about we have to respect this market until it tells us otherwise. And but at the same time, we can forecast ahead future events, and we have to be mindful of those things. So let's keep going. Let's keep playing this game. Let's look at 2000. This is the Dow. Let's look at the SP. 2000 top. What's 2000 plus 21? 2021, of course. You even have a little bit of a minor cycle there with 2002 adding 13, and you get 2015. So you had the minor cycle low to another minor cycle top. Again, you can see why I've been as cautious as I have and why I've been expecting some major turbulence. And I get it. This time it's different. This time's the Fed. This time that. Look, sometimes when it's time. And that's really, if you look at this this price action, this is indicative of blow off top. If we look at the long term, that even just going back to the 80s, like that's a blow off move. But now on a shorter term, let's try and figure this out here. What can we expect in the next couple of months? Well, we could potentially see, and I believe I mentioned this in the live stream yesterday, we could potentially see some type of correction. I think we're in corrective mode right now, but that does not mean we can't go higher. I think that right now this is a nice little rollover, but I'm not sure that this is the big top. I believe there's still too many bears in the market, and you guys have heard me talk about that. That doesn't mean we can't have a correction maybe down to the 200 MA before a massive rally into the end of the year, and maybe even a little bit into early next year. But now you guys know what I'm looking at. So this is essentially, this is all just fib stuff. It's GAN stuff, and it's time tested. And again, at the end of every move, it's always this time it's different. In 2000 it was, oh, this time it's different. The internet's the future. In 2007, oh, housing will never go down. And now it's, oh, the Fed will never let markets collapse. Well, there's a lot of things that can change that. The Fed could lose control of rates. And I can't speculate. I don't know what the catalyst will be, but I know that there's a major event coming up sometime towards the end of this year or next year. And that is really what I've been on about for quite some time now. And who knows, maybe we have topped out already. And maybe we're going to accelerate to the downside. That remains to be seen. And you guys know I had the cycle, smaller cycle, although still a big one, for September 14th, which was last week. And that looks like it has triggered. And it looks like this one actually worked, like all the other cycle triggers we've had earlier this year. They've worked for, maybe a couple of days, a week, and then we just couldn't get a bigger correction. But this one looks like it's going to be an actual correction. But, I would have felt a lot better about it if we had just gone straight up into that time frame, that cycle. But anyways, to wrap up, I think there's a great possibility of a correction here, followed by a blow off top. So that's kind of what I'm seeing right now moving forward, but we're just going to take it day by day and let the charts tell us a little bit more. But yeah, hope everybody enjoyed the video. If you did, please like, comment, subscribe, give me some feedback. If you want to follow me on Twitter, the handle is in the lower left corner. YouTube handle is there as well if you'd like to subscribe. And if you want to become a patron, it's $5 a month, which is 60% cheaper than Amazon Prime. And I post swing trade alerts, which will allow you to make the money to spend more money on Amazon Prime and give Jeff Bezos a higher income. But anyways, guys, take care. Thank you so much for watching, and I will see you later on the chart.